Hey everyone, this is Chiu, your financial coach, and today I'm gonna answer one of the most common questions I get when it comes to property investment, and that's whether you should buy it fully in cash or just get a mortgage. So for this example, let's assume that you already found the property that you're interested in and it's valued at $200,000 and you have already the money in your pocket ready to use it. However, you're deciding which option is the best for you. And just to keep things simple, let's say you're gonna wait at least 6 years until that value is already 270,000, and the property that you can use, it produces $10,000 per year as an income. So with that in mind, regardless of the example, let's jump into the first scenario, which is buying from day one fully in cash. That means you don't need to borrow any money from any financial institution. So in 6 years when you sell it, it's very simple because you just simply get 270,000 from the sale, and then if you deduct your original investment, that leaves you with that 70,000 profit on growth. That's pretty good. And then we know that you have 6 years of receiving an income of 10,000 per year. So that means you get extra 60,000 in income. That leaves you with a profit of $130,000 just from that investment of 200, which is pretty good as well. So that means you made a profit of 65% on that investment. Not bad, right? So now what about the other option? If you, instead of doing from day one, instead of paying use all your money for that investment, you simply use a mortgage, which means usually you're gonna put 30% as a down payment and then get the other remaining from a bank or an institution. That means you put a $60,000 investment and the $140,000 is borrowed. So then the same property will also grow to $170,000. We need to deduct both your original investment and also what you need to pay back as a loan. So that's $140,000. So that leaves you that after these deductions, you still made a profit of $70,000. What about the income? Well, just to be very conservative, let's assume that you are cash neutral. Actually, most of the time you're actually gonna see more money, but just to be as conservative as possible, let's say you're cash neutral and there's no income. So in this case, your return was $70,000. Of course, it's less than this amount. But let's remember that also you put less at the beginning. So that means that your return on investment is higher, it's 116%. And from day one, you still have 140,000 extra cash to continue investing in some other things. So let's keep this in mind when you do your next investment in a property.